Hey guys, it's Navi with TendieTrader. Welcome to the video. Pleasure to have you guys aboard today. In today's video, we'll be talking about emotions in options trading. It's a big component of putting money at risk when you're trading such a volatile type of investment vehicle such as options. So let's dive into it. I got a few different things that I want to touch base on. But before we get started, don't forget to hit subscribe. If you guys find this video useful or even helps you out a little bit on your journey to making those tendies, hit subscribe and leave us a comment below. Love getting that feedback on what's really resonating and helping our viewers. All right, so first up, this is a big one, guys, and I'm sure you've heard of it, but FOMO, fear of missing out. When you see those massive days, especially in a market like we're having in 2020 with these, apparently it's the new term is a kangaroo market. But ultimately, when you see these giant swings up and down, and you see these random tickers that no one's ever heard about before just mooning overnight, the last thing you want to do is just jump in because you see everyone else making money that got in earlier. What that's going to do is make you buy at the top and you're going to be the one holding bags. So a lot of these tickers, there's still room to run in most scenarios, but you're not going to see those crazy returns. And ultimately, you're putting your money at risk in something that has already sailed. That ship has left the harbor, and there's probably better opportunities and a much safer way of making gains than being the laggard to the market or to a specific ticker after that news is already kind of or that trend has kind of set in. You can always play the downside. Again, that's a risk too because if the trend does continue, you're gonna see positions disappear overnight. And last thing we want to do is put money at risk that is truly going to just wipe your account clean or disappear overnight. Ultimately, we want to make calculated choices and take on risk with a sense of understanding as to how high that risk is. And based on your tolerance level, that decision is up to you to make. But just keep in mind that FOMO is a real thing. And when you're sitting there and watching something go 20%, 30% higher over through the course of the day, you're going to want to get in, but just try to make sure that you're at least aware of that emotion before you actually make that trade. All right, rule number two, set rules. Makes sense, right? Ultimately, you can't get into options trading without having a plan of attack. And the easiest way to do that is to write down these rules. Not these specifically on the screen. These are just a few examples that I've run across and talked to other people about. But you can pick and choose the ones based on your risk tolerance and your specific trading style. If you double your money, take some profits. Don't fall in love with positions. If you truly love Slack, then make a bet on Slack, but know when to exit if the trend is not in your favor. Bankroll management, huge thing, guys. Just make sure that you're allocating a certain percentage of your account for each position. You don't want to YOLO everything on a weekly expiration date and have to keep rebuilding your account. Um, I know a few traders that only pick a certain set of tickers. Get to know those stocks really well. How do they move? What type of volume is normal for these? What's their if they're range bound? What are those ranges? Tesla over the last week and a half has been pretty much hugging $1,000, and it's been pretty easy to make some quick profits just buying calls when it's over below 1,000 and buying some puts when it crosses over 1,000. Ultimately, that trend is going to break eventually, but for right now, it's been a pretty consistent way of getting 10 to 15% returns. Never buy puts. Wait to buy the dip. I know people that in this market, they never want to short the market. Ultimately, stonks only go up. Just wait till they correct a little bit and you're going to get a buying opportunity to buy some more calls. So the rules go on and on. Just find what resonates well with you, and you can always set the frame or the box within which you're trading. And ultimately, that box can adjust as your personal tolerances or knowledge about options go up. as well as your account gets larger, you can maybe relax certain sets of rules or make them tighter if you're running into some down variance. But at the end of the day, what the important aspect of it is, set rules and stick to them. You don't want your emotions to guide it, right? If you have a set game plan and you follow it, then ultimately you're not going to let emotions get in the way. And last but not least, don't get greedy. This is probably the easiest way for people to blow up accounts. This is where you see people YOLO on weeklies or on some, black swan event trying to go for those 10 baggers. Guys, those are really rare. During coronavirus, we may have had an opportunity to get those over the course of 2 to 3 weeks. That's not always going to be the case, right? Those massive movements in the underlying value of those stocks or those companies, you're not going to see that big of movement on a consistent basis. So if you double your money, get out, or at least set some level at which you're going to take profits when you see them. Because again, not every trade is going to be profitable. So when you do get a profitable trade, just make sure you're taking some of that money off the table and you're continually growing your account rather than seeing those volatile swings when you take on massive amounts of risk and are always looking to hit those 6, 7x type of returns. But at the end of it all, it again goes back to rule number 2, which is just setting those rules. Whatever your rules may be, just make sure you stick to them. And ultimately, that's going to help you become a much more profitable trader over the long run. All right, guys. Well, I hope you enjoyed that video. Just make sure keep your emotions in check, keep your emotions top of mind, and just make sure that they're not guiding your strategy and they're not guiding your trades on a day-to-day basis. Well, hope that was helpful, guys. Again, this is Navi with TendieTrader, and hit subscribe if you found this useful. Also, check out TendieTrader.com. We have tons of great videos, articles, and guides on getting started in options trading and becoming a successful or profitable investor. Well, guys, thanks for watching, and I'll catch you.